Hello everybody, welcome to this week's edition of Northwest Quadrant Wealth Management E-News. Thank you for joining us. We thought we'd talk a little bit about the most important thing as it relates to stock prices and what drives stock prices, and Josh can talk about that. But I wanted to briefly talk about the fact that interest rates we don't think are going lower anytime soon, and that's because the economy is doing so darn well. You ask the average American how they think the economy is doing, and they say they don't think it's doing well at all. But then you ask them about their situation, and they say, well, my situation's great. So there's a big disconnect, and a lot of that comes from the news, watching the news. And, depending on how you get your news will depend on how you really see the U.S. economy doing. But when you look at the data, the actual facts in the U.S. economy, we have unemployment under 4%. The U.S. economy is still growing. The data points almost across the board are continuing to be good. So what would be the reason that interest rates go lower? It would mean the economy is slowing down, that unemployment is going up, and bad things are starting to happen in the economy. So the reality is interest rates are not restrictive right here. None of you should be wishing for interest rates to go lower, because that would mean bad things would be happening in the economy. And so when Josh and I look at all the data points, we think rates are fine where they are. The idea that we would be lowering interest rates means that bad things are starting to happen in the economy, which just isn't happening. And if the Fed cut rates with what's going on in the economy right now, inflation would come screaming back. So I don't think anybody wants that. But at the end of the day, the most important thing as it relates to stock prices is earnings, and Josh can give us the update on that.
We've definitely had a good earnings season so far. Big tech is just printing money like it's going out of style. We'll get Amazon after the bell today. Expectations and guidance have really been across the board pretty good. McDonald's reported this morning, never really a reliable indicator of the health of the consumer, but certainly definitely some pain being felt on the lower echelons of the wage distribution. To sort of add to what Tyler spoke of, we're sort of nearing that inflection point where if the Fed doesn't cut by now, they're probably going to have to wait into 2025. And that's because the election is fast approaching. And lest they be perceived as being political, you can certainly imagine a new incoming administration pointing a lot of fingers if the Fed sort of juiced asset prices by cutting immediately preceding the election. But J-Powell comes out tomorrow. The market expectations are essentially that he'll come out pretty hawkish, which definitely at odds with what he said back in December. But anything that would be contrary to that is definitely going to lead to additional upside in stocks. But remember, ultimately, earnings are what drives stock prices. Earnings continue to be good despite higher rates, and that's a trend that we foresee continuing.
So, we're relatively optimistic about 2024 as it relates to the capital markets. Of course, we'll have volatility. We're experiencing volatility right now as the market sort of grapples with the idea that rates probably aren't going lower. But again, as long as earnings are growing and the data points in the U.S. economy are good, we think that overall 2024 will be a good year for stock prices. That, again, doesn't mean we're not going to see volatility in the capital markets. So as always, if you have questions about your situation or your account, give us a call at the office, 800-743-0988, or email either one of us, Josh or Tyler, at northwestquadrantwealth.com. We'll see you back here in a couple weeks.